You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRoque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you so much for being here as always. Today, I wanted to talk again about frequently asked questions. So this would be part 2. I already did one short series on frequently asked questions. The first question I wanted to cover today is, what if I'm uninsurable? People ask all the time, what if I'm uninsurable, or what if my health isn't ideal? My health isn't that great. Shouldn't I wait until I can lose weight, improve my cholesterol, lower my blood sugar, et cetera, et cetera? So I would say that if you really feel you're uninsurable, if there's something going on that is really concerning for you, or you've recently gotten over cancer or something like that, yeah, I would want to double check with an underwriter first before putting you into underwriting. I do something called an informal request, or the company does something called an informal request, where they will allow me to submit the health questionnaires that you would be taking in an application. I can submit those questionnaires, they can look them over and give me their best guess, their best answer on what they think you would be insurable as, like the best rating they think that you would be able to receive based on that information. So I would submit these health questionnaires and wait for the underwriter to give me their best guess on what rating you would receive, and then we go from there. So it's really a good idea, if I ever was to do this with one of you, that you fill it out to the best of your ability with anything you've been diagnosed with, that they could find in a medical record or anything like that. So the more information, the better, so that we can get a good feel and that the underwriter can have as much information as possible to give their best answer as far as what they think your rating would be. And then if they see that they feel that you'd be insurable, then absolutely we can go for it, try for an application and see what the actual rating would be once they do a deeper underwriting. If your health just simply isn't what you would say ideal, you feel like you have high cholesterol or high blood pressure or blood sugar, I don't think it's a good idea to wait. Again, we can always do the enforce or the informal request if you feel that you may have a larger concern. But otherwise, I think just going through underwriting, certainly you don't need to be in perfect health to get approved for an application or for life insurance. Most often, what's most important to the underwriter is simply that you're taking care of your health. If you have high blood pressure, that you're doing something about it, that you're taking high blood pressure medication, or that you're just taking care of yourself in other ways. Generally, they do want to see if you're on some medication, if you have something that generally would come with medication, like high cholesterol or high blood pressure. Blood sugar levels, if you have diabetes, that gets a little dicey. Sometimes a diabetic person is uninsurable. But again, it just depends on how you're taking care of yourself, what your A1C levels are, what your sugar levels are, and all of that. So I think it's a good idea still to try for it. On the bright side, when you do have a rating that's unfavorable or lower than you would want, the paid-up additions rider on a whole life contract does not take into consideration your health rating at all. So that health rating only applies to your base premium, and that's the lower part of your premium, actually, usually, if possible for you. So a big portion of your premium, the health underwriting or the health rating would have absolutely no effect, make no difference. On another note, if you have health that you are working on improving, you're exercising, you're changing your diet, you're doing what you can to get off certain medications, you're just doing your best to get in better shape, better health, we always can underwrite for life insurance, lock it in now so that you at least have the coverage and you're able to begin. And then after a minimum of 1 year, you can go through the health underwriting portion again of the application process, just for them to see how your health is doing at that time. So if your health has improved after 1 year, your health rating can be changed. And then that will take effect onto all of the numbers in your contract. And so in the long run, the numbers will end up looking better if your health rating was poor and then you were able to get it upgraded to a standard rating, which is an average rating, or an even better health rating than that. And so you can always go through underwriting again. if you feel your health rating would have improved by a good amount, and try to get that changed. And if you have a term contract, that health rating will change the price. So your price would actually go down if your health improved. And so overall, it's great. So we can certainly go through underwriting, try to get that contract. If it doesn't work out, your health isn't what you thought it would be, we can just re-underwrite again in a year. I do always think it's a good idea to lock in that coverage. And if you, for some reason, your health rating bumps you out of the ability to have a whole life policy structured for IBC or structured in the way you wanted it to be structured, usually I suggest that a client locks in some term insurance, because this means that the company doesn't feel you're very healthy. And so having some life insurance in any way, shape, or form is better than having none. And then again, it locks in your opportunity in the future if you do want to be able to convert some of that term insurance into a whole life contract, if you want to be able to have some of your life insurance last for a long time. You want it to last till your age 100 plus. So you at least have that opportunity. If you lock in with some term insurance, you can convert at any time up to age 70 or the end of your term contract. And then again, if you lock in the term insurance, it's not the most favorable rating that you would have hoped for. And then you wait a year, and now you can go through health underwriting again, try to get a better health rating. And then you do get one. Now your pricing on that term contract will change, it will drop. And then you will be able to begin, you can convert some of that, or we can begin a new contract, a whole life contract, but at least you will have locked in an opportunity to have that coverage. So I do think it's a good idea, even if your rating isn't favorable, to move forward with something that will allow you opportunity in the future to protect your family. Now, another question I often receive is, hey, I don't have much money to save. How do I get started? And so a lot of people might think, oh, I need a lot of money. I need a big premium to be able to start a contract. Of course, the more the better, because the more you fund your infinite banking contract, the larger the pool of cash that you're going to grow for your financing needs. So, you want to finance something big, a car or college or your first house or whatever it is, you are going to want a large pool of cash. So as much money as you are able to pull out of that thing is going to depend on how much you've put into it, especially in the beginning years. So you would like to save at a higher rate, but if you can't, certainly something is better than nothing. You would want to start with whatever you could, be able to fund that policy at whatever amount you're able to start with, and then just grow it from there. If you start with something today and you foresee you're going to have a bonus by December, or you're going to have a bonus before the end of 1 year, then you would be able to plan that into your contract. So you could plan it with a premium starting for today, knowing you're going to be receiving some amount of bonus or tax return money or whatever it is. And we can plan that in, plan to be able to add that money in at a later time within the first year. Or if you simply have a small premium, that's all you can afford, that's all you can do. Again, you can start with that. And in the future, if you're able to save more, you get a raise, you have another income, you get married or something, you can always grow your banking pool of cash by adding in another policy at that later time. So there's different ways to be able to grow your system. I just think starting with whatever you can, as soon as you can, is the best way to go. In fact, my first whole life policy was very small because I had already been in the business for a while. I had disability, term insurance, 6 universal life policies, which I mentioned before. I have since terminated and moved all that money to whole life. But I had all these other things going on. So I was so excited about an infinite banking policy. I started with whatever I could at that time, which was $1,200 a year. Pretty low, I would say. But since then, I have put a lot more money in than that. I have a lot more policies. Each of my kids, they have 2 policies. And so as I was able to increase my premium, I did by adding policies with whatever my budget could afford at that time. And so that's what you can do to get started. Start with what you can and then grow it as you're able. You also could grow it by locking in some of that term insurance at the same time that you're getting a whole life policy with a budget you're able to afford. And then later on, when your budget increases, you can convert that term and start funding it as a second whole life contract and a second pool of cash that you can grow to be able to use throughout your life and in your retirement. So a third question I receive often is, what if I need to change my premium amount? Is my plan flexible? Well, yes, your plan is flexible. I always tell my clients that whatever we start with, we want to hit for that first year because that first year is setting your MEC ceiling, your modified endowment contract ceiling, which is your taxable ceiling. So, whatever we set for that first year, we want to be able to fund at that amount for that year. But then once we hit that first year's premium, year two, if you were unable to afford the same amount of premium that you started with, you could always drop off that paid up additions rider and drop down to that base premium, which is like half or around half, less than half. Just depends on the contract, the person, the age, the health rating, all of that stuff. But you would be able to drop off a significant portion of the premium, even in year two, if you were suddenly had a tragedy or something happened, someone lost a job, something like that. And you're able to drop that premium for 4 out of every 5 years. Now, of course, I'm going to tell you, you should fund your paid up additions every year that you're able, and is certainly for the first 4 years if you're able. But you do have the flexibility to drop it or lower it if something was to happen unexpected. Even if you were not able to fund the full paid up additions premium, you could fund any amount of it that you wanted. You could fund any amount of it from zero to whatever the top amount your full premium is. You can fund any portion of that along with the required base premium that will be due. So you have that flexibility. In addition, once your policy is rocking and rolling, and then 1 year, maybe you can't even fund the base premium. You're saying, oh man, life has really hit us this year and we can't afford the premium at all. Well, another great thing about the whole life contract, you can actually have the policy pay the premium in any year that you have a hardship, so long as you have funds in there and haven't borrowed every single dollar out of it. You can have your policy pay your premium as a loan. And so it may not be ideal, may not be the way you would like for it to go. Maybe you don't want to have to take a loan for a premium, but it is an option in case you have a hardship year. And so that your whole policy and your whole plan and everything doesn't blow up. And then we see where we are at year two. In the event that you are unable to continue at your premium level or even your base premium level for a longer period of time, that can also be lowered. We would just talk with the company, see how much we can lower it, see what fits your budget, and lower that premium to what works with your budget and what you can sustain. And of course, with whole life policies as well, once you hit 7 to 10 years, somewhere around there, you can discontinue your premium altogether and just let the policy grow. Now, the policy will be efficient, it will grow, it will be great, but it's not going to grow by as much because you're not funding it anymore. So it's going to have less money overall because you are no longer funding it if you decide to stop payments at a certain time. But it will still grow efficiently with what you have in there. And your death benefit will drop when you stop paying that premium, and then it will start to increase again. So it's not the end of the world. There are definitely things we can do if something happens unexpected and you need that flexibility with your premium. So I thought I would keep it to just these 3 frequently asked questions today. I hope the information was useful for you. I will maybe do a part 3 on this and look into some more questions I think that people ask a lot. As always, if you are realizing that you would like to implement this saving strategy into your life and would like to partner with me as your advisor, please reach out to me at valerie@alphaomegawealth.com. I would love to meet you, connect with you, and help you. I do hope you have a wonderful week, that you're enjoying your summer, and I will be back with more information next time. Take care.
This is thepodcastfactory.com.